As we get started with the week, let's talk about key earnings that are coming out that may tell us what's going on with the consumer, what's going on with tech. Monday starts off with Workday, Zoom, and LendingTree. LendingTree will be interesting to me to see if they have any reserves for bad debt, what is going on with new loan origination. Workday will be interesting to see if people are continuing to cut their cloud spend. One of the things that I think is coming to the kind of cloud market or software market is people are going to be reducing their user count. They are going to consolidate technologies. It's going to be a very tough time, I believe, in the software cloud business, but we will get a peek from Workday. And of course, Zoom. What is Zoom doing to increase revenue flow? Are they looking at adding technology, acquisitions? What is going on? Tuesday, we have Target, AutoZone, and Compass. Compass is going to be interesting because, again, as you've been watching this channel, transactions are down 40%. What is Compass doing? Are they consolidating offices, laying off people? They've already, I think Compass has had 2 layoffs. Is more cost cutting coming? AutoZone, what is going on with the car market? And of course, Target. We got a little peek from Walmart last week that the consumer is being more conservative on how they spend, but what is Target telling us? Wednesday, we get Dollar Tree, Lowe's, Salesforce, and Snowflake. Again, what is going on with the cloud business, software business, Snowflake, and Salesforce. Then Lowe's, we heard from Home Depot last week. What is Lowe's telling us? And of course, Dollar Tree. Is Dollar Tree seeing an increase in transaction size, customers? What is going on in that business? And then finally, Best Buy, Dell, and Six Flags on Thursday. Six Flags will be interesting. Is it seeing increased business because we are stopped buying stuff? We are now doing experiences. Dell, is the PC business back or is it still in trouble? And of course, Best Buy. Has everybody already bought their TV and computer? Is that business still struggling? On top of that, we have pending home sales coming out on Monday. Pending home sales actually are estimated to be up 1%. I am going to take a wild ass guess and say that it is up well over 100% of that. So I'm thinking up to 2.3%. I think pending home sales is going to show a surprising number, but we'll see. I'm wrong all the time, but yep, I wanted to record this. The morning in Singapore. I don't know if you guys, I don't think I said where I am. This is morning in Singapore. So let's keep going. We do get a new CPI print in the middle of the month. I am kind of wondering how important it is. And I think it's really important. I think that CPI number, and again, does it break higher like PCE? Like I warned last week that PCE was going to come in hot and break trend. Will CPI, or will the base effect, right? The next month, the base effect is quite large. Actually, the next 3 months are pretty large. Will the base effect, a big month rolling off, save us? I don't know, but that CPI print middle of the month in March is important. It's going to really signal, does the Fed really need to do 50 or not? We also get a jobs number, I believe, not next week, but the week after. That will be equally important. Did we create another 500,000 jobs like we did in January? Is January revised lower? What is going on? So a lot of important numbers coming out in the next couple of weeks. I saw an article referencing MetLife. MetLife basically did something that says by 2030, so what's that, 7 short years from now, that Wall Street might control 40% of the single family rental business. And it's a scary stat. Just so you know, today it's estimated to be at 5%. And so 5% of 14 million homes. That's about the size of the rental market, just for scale. So what's 5% of, so that's like 700,000 units. They're talking about going to 40%. So let's assume 14, what is that? 5.6. So they'd have to buy 4.9 million homes in 7 years. That's 700,000 homes a year. I don't see it. I don't see it for lots of reasons. The biggest reason is, frankly, legislation. I think if they got to that size, Washington would step in and say, keep your hands off single-family homes. But also, I don't know where they're going to pick up that many units. I don't know that. I'm guessing MetLife was assuming that mom and pop landlords would sell to Wall Street. I don't know where Wall Street picks up 700,000 units. They did a lot of their early acquisitions when during the Great Recession. I just don't think they can buy that many homes. I could be wrong. Maybe they're going to build them, right? Maybe they work with builders and they do a lot of build to rent models. That's possible. That's probably the only way they get there. But yeah, I don't see it. I think it's a scary headline. Will they be bigger by 2030? Absolutely. Could they be 10 or 15%? Absolutely. Could they be 20, 25? Maybe. But 40? I think 40 is a stretch, but we shall see. Got some feedback from 5 frequent guests on CNBC talking about what they see coming. Jamie Dimon still thinks a soft landing is possible. Strong jobs, robust consumer. But his base case is a mild recession in the next 12 months. Kevin O'Leary thinks a soft landing is very possible, and he actually thinks the stock market will return 8%, 6% on the equity, 2% dividends. Jeremy Siegel, he thinks inflation is overstated and the economy is actually stronger than he thought. He thinks, unlike Jamie Dimon, and soft landing is possible. Jeremy Siegel says no landing, meaning we just keep going, is actually his most likely scenario. That's interesting. We went from hard landing to soft landing to no landing. Fun. David Rosenberg, he thinks it's a fairy tale, so we're getting increasingly negative. David Rosenberg says it's a fairy tale to think the U.S. can keep growing and avoid a recession. Basically, recessions are part of the business cycle. Basically, David's real point is we have not felt the full effects of interest rate rises. To which David, the housing market has seen a 40% drop in transactions. That's pretty significant. And then finally, Jeff Gunlock, he says, without question, recession is coming. He's already, I think we talked about it last week, he's starting to buy treasuries, both the 2s and 10s and 6 months, to get after it. Looks like John Burns Real Estate Consulting has put out a great series of tweets. Eric Finnegan, give him a shout out, VP of Research and Demographics. He says that a remodeling boom is on the horizon. He says that for a couple of reasons. There are 24 million homes coming into prime remodeling years. Remodeling years are 20 to 40 years of age. 2, with so many people locked in under 4%, he believes that people are going to stay put and choose to remodel versus sell and buy new. And then finally, equity levels are high, so people can go get their equity and use it to invest in their house. And then finally, I want to talk about Australia. One of the things you do when you're on a cruise is you talk to people, and we talk about real estate a lot, obviously. One of the things, we had a great conversation with a couple from Australia, and we talked about the different housing markets. And Australia, if you don't know, is feeling a lot of pain. So it was really interesting to see this couple actually say, basically the United States mortgage market is crazy. And I said, what do you mean by that? And there's basically 2 things. One, I don't know if you know this, but in Australia, and I believe many markets like Canada, the UK and such, if you walk away from your home, the debt follows you. I don't know if you guys understand how unique we are in the United States. Let's give you a real example. Let's say in 2006, you bought a home for 300 grand. Like the day you got in, you have a note for 300 grand. You live in the house for a couple of years when your payment is low, then it suddenly resets. You can't afford it, you want to sell it, you can't sell it. Ultimately, a year or 2 goes by and you are foreclosed on. Let's say that bank sells that house for 100 grand because that's the asset tied to the mortgage. In this case, you, the owner, you are not held liable for the deficiency, right? The note is 300. The asset was traded at 100 grand. There's a $200,000 deficiency. In Australia, and I believe many other markets, you would be held liable for that 200 grand. It would be a personal note you would owe and you would need to make good. The other thing that is very interesting is in Australia, their mortgage market, or interest rates and mortgages are adjustable. We were talking about rates. They were doing loans, and this is his numbers, not mine, not verified, but he was a great guy, so I'm sure it's close. They were giving mortgage rates at under 0.5%. We in the United States had some loans at 2.5%. So again, Australia was giving loans at under 0.5%. There's a trick or a gotcha. These are adjustable rate mortgages. So today in Australia, it's not uncommon to see rates over 3%. So think about that. You've gone from 0.5% to 3%. That's a huge jump. You might be able to afford your payment at 0.5%. You can't afford it at 3%. So there's a lot of young people trapped in their homes. Again, the debt, if they walk away, they're held to. So lots of pain going on in the Australia housing market, likely others. And again, folks, it's always the debt. That's why commercial is in trouble, right? We have $48 billion in at-risk loans on trophy properties because the debt's coming due in the next 6 quarters, 18 months. It's the debt. So again, we are pretty unique. We have 30-year debt in the United States, which is a gift and an asset. And we also have, in the worst case scenario, if you have to walk away or give the home back to the lender, you are not typically held for a deficiency. So in the end, folks, have a wonderful day. Enjoy the last shot of Singapore. What's over there? Oh, just a ship. Take care, guys. Bye.